There we go. I think we're live. I think we
I
did
think
it.
we are. Let's do it.
We'll see how it goes. This is our very first episode. Welcome, everyone. Tom Ollis here, co-owner, uh, chief growth officer with Edge Home Finance. I got my guy, Major Singleton, who's based out of Texas, number one LO out of Hawaii last year. Top originator with the company here with Edge Home Finance. Has just done an amazing job at really, not only growing a team in the wholesale channel, but being of service to everybody around him, right? Being of service to his clients, to his team that he runs. And we wanted to try something new. I was talking with Major earlier, and it was like, how many people are watching social media rather than TV at 8 o'clock on a Wednesday? So we're going to find out the answer to that. I know for me, though, that was me. I'm on social media at that time of night, checking up on LinkedIn, what's going on, Google searches, all of that. But our goal really is just to have a couple candid conversations on why we believe, both Major and I, why we believe Edge is a great fit for originators. Major has been with us now. It's been about 2 years. Am I right?
2 years. Yep, 2 years.
2 out of his 3.5-year career in mortgage lending. You were 23 years in the military, correct?
Correct. 22 years, 11 months, and 3 days.
Always about your specifics. This is where I screwed up. Major and I were on stage together in Las Vegas for a mortgage conference, and I round up, right? I'm your typical mortgage guy. I think I put it to 30, and he's like, Tom, it's 22 years, 11 months, 3 hours, 22 minutes.
Everyone counted, man. Everyone.
So we got it right. He's more down to the details. That's what I love about him. But really, we just wanted to have some candid conversations on, Edge right now has been exploding, right? The month of October for us was just phenomenal, right? When I talk about phenomenal, it's a tough market right now, as you know. I mean, mortgage applications, not to play light to the scenario, mortgage applications are at a 28-year low. And as an originator, you need to find a way to be able to do one of two things. You either need to find a way to make more money per loan or find more clients. And that's really where I would say people, not only Major, even myself, when I got into the broker channel, I realized some of the difficulties I was having working in the distributed retail model, and why I was having concerns as to what is going on. Like, how come a broker has interest rates that are 0.5% lower than I am, and when we're at 2.25 and somebody's at 2.75, it didn't matter as much. But today, if you're at 7.75 and somebody's at 8.25, your agents are asking you, what's going on? How come my rate's higher than if I'm using my preferred lender that's a vice president at a certain company where everybody's a vice president, or I'm a regional manager. And kind of what I wanted to have here is really just some open conversation, right? Major has done I consider him a friend, right? Major and I discuss a lot of things that are not only about business, but even personal life. And we just kind of want to peel back a little bit of the layers as to, people will say brokers are better. And I want to provide the reason why is it that both him and I share that same philosophy, that brokers are better. So Major, if you don't mind, give a little introduction. I think we got some people. Appreciate the comments coming through. Just so we're clear, I am not the IT genius. I'm trying my best here. I always believe in failing forward. And right now, we're trying it. I got it streaming to LinkedIn, Facebook. Major, I think, has it on his YouTube channel. If you haven't checked out this guy's YouTube channel, do me a favor. Go over to YouTube after we're done with this call. Check out Major Money Matters on YouTube. Not only does he invest what I view as his biggest asset, which is time, he invests his time into it. And to me, it's always about education. So Major, I'll be quiet for a second. Say hello to our crowd, and thank you again for being here with me.
Well, Tom, thanks for having me, and thanks for the invite. Thanks for the opportunity to do this. And I think, just understanding where originating is right now and mortgages are right now, I think it's just important for us to have a candid conversation just about the market and what we're seeing from originators. And we get into the debate. I don't think it's much of a debate about, brokers being better. I actually had a guy come up from, and I'll be I'll say Southern Texas, I'll be as nondescript as possible. He's a good originator down in the South Texas area. He came up to my house, him and his wife, to have a conversation just about what he had seen. And he's of course made the commitment to come over just because we look his company's pricing, and he is with a very large retail lender here in Texas, and he looked at his company pricing compared to not the pricing that we're advertising, not we're saying. He's looking at the pricing that he has. Like he said, look, I want you to service this client, and see what you can do. And he sent the client over to me, and we locked at a rate that was 3/4 lower than his retail company was doing, and we were CTC in 6 days.
Was it VA
So
loan?
no, this is FHA.
So government loan. I mean, to me, that's one of the things that we'll dive into. Just for those that aren't aware. I mean, my biggest goal with any time that we're meeting is to be able to educate people, right? And I
Mhm.
think when you look at the retail model and the way that it's been ran with where they're very heavy on the margins on government loans, right? Every P&L model that I've reviewed, or we've hired people that have come over, most retail models operate at what we call 5 to 600 basis points. So for those that are you're stuck on my Facebook page as a family member or friend, let me just explain what this means, right? Margin is what is built into the interest rate. So if a par interest rate today, and once again, this is not an offer to lend, this is me and my buddy Major having a conversation about education here. If the margin is 500 basis points, that means on a loan that if the base rate is let's just say 7%, right? But they built in margin that pays 5% to the company that's lending it. Most companies have operated based off of a margin on all government loans, both, FHA, VA. It's why I asked Major. They were beating them by 3/4 of a point. Normally, that's what we see. We're seeing that they really just gouge on government loans. Conventional, they try to stay in the realm of it because, this is 100% my opinion. They know that conventional buyers a lot of times are a little bit more savvy, right? They know that they normally have a little better credit score. They shop a little bit more. So they want to stay close to the market. Where for us on the broker side, we operate, everybody is the same, right? Whether I'm doing a government loan or I'm doing a USDA loan, I'm doing a conventional loan, our margins are the same across the board. So much so that legally we have to operate that way, right? Like our compensation agreement with every bank is the same. And we've got at Edge Home Finance, we have, I think we're up to 160 some different lenders that we have choices to be able to broker loans to, but they're all the same. And part of why we've had conversations around margin compression, and for those that don't know what that means, it's when we're coming into a market right now that has a 28-year low for mortgage applications. It's the oldest saying in the book: when the food on the table shrinks, the table manners change. And we're
Mhm.
seeing that in this industry right now, where originators are having to ask their managers for pricing exceptions, right? Hey, my rate, I'm getting beat by this broker. What can you do? I got to go ask my manager for a pricing exception. Um, Manager, have you ever asked me for a pricing exception?
I don't ask you for anything except how you doing.
That's it. That's it. And why is it as a broker, and especially with edge financing, you don't need to ask those questions?
Because it's really because you control your business. If you need to get competitive, you get competitive. If you need to make the numbers work for sometimes for a borrower to qualify, you do what you have to do to get the loan closed and serve the realtor, serve the client, and you move on to the next thing. And sometimes, when we say, hey, and we go back to this thing as, are brokers actually better? The question is, better for who? Is it better for the client or is it better for the realtor? My answer to that is emphatically yes. And I'll tell you why I believe that. Back when I was on the retail side, there were just some things that I saw where we were able to, I didn't have the flexibility that I have right now to serve my clients well and to serve my realtor partners well. So there were specific things with pricing and concessions. I did have to go to my branch manager and ask for concessions and stuff like that. And another thing, when you get into margin compression, Tom, one thing we're starting to see right now at those retail shops is there is less origination, therefore there's less profit. If there's less profit, you either got to originate. If you're it's still any other business, you either have to make more money, originate more loans, or you have to cut your costs. If you can't make more money because your loan officers aren't originating more loans, and you start cutting costs. So what you start doing is you start laying off operational staff. And who do you lay off? You lay off the people with the highest salaries. The people with the highest salaries tend to have the most experience. So if you're an originator and you're originating at that company, you find out that your turn times are slower. You have more problems getting loans through underwriting, and you have these issues with your loans because the smart person who they let go because the salary was too high, somebody that was not in control of your business, not in control of originating, not in control of the work that you actually did to bring that loan in, is making decisions to affect your business. And that is really, in my opinion, an atrocity to the originator. So you're telling me that I'm going to go work. I'm going to go put all this in. I'm going to work on a Saturday. I'm answering my phone calls on a Sunday. I'm working late at night. I'm doing all this stuff to get this loan in, knowing that originating is lower, knowing that every lead is so important. I'm going to do all of that. And then the head of some company is going to make a decision about how the operations staff is run that's going to affect whether I close that loan or not. That is absolutely ridiculous, in my opinion. So when you start looking at things just from a loan officer standpoint, okay, just looking at things like that, and I could tell you, I've had conversations with many retail loan officers over the past couple of weeks and past couple of months. When you start seeing things like this happen, that's when you can understand that a branch manager or a regional vice president or a president of a company that's never even met you, doesn't know what goes on in your house, doesn't know how many kids you have or anything about your family. They are making decisions about how you put food on your table. And that was something I just was not going to stand for as an originator.
And I think we're seeing it too. Even I met with, it was kind of funny. I don't meet with too many originators out of Hawaii, but there was one that one of your recruits, Nicole Farmer, is just an amazing person, right? Wicked smart, works hard. She had a new originator that I talked to today. And he was like, yeah, I don't understand why it is that I'm getting beat so bad by brokers in that market. And he's in Oahu, right? So obviously you've been the number one broker in Hawaii last year. You know that market. It's one of those situations. You got higher loan values, right? And it's ultra competitive where everybody knows each other. And he was like, so what my branch manager told me is in order for us to be more competitive, they cut my compensation to where I make 45 basis points per file. And I said, okay, so they cut your compensation. You're the one that, in my opinion, and you will hear this as part of what our culture is here at Edge, is I work for our team members, right? I'm lucky enough to where I've built this organization with my partner, Chris and Chantel and Nick and a lot of our other members. But at the end of the day, without great originators like Major, we don't really have anything. So I always say I work for my team members. If we're looking at cutting, I get it. What Major's talking about from a massive corporate organization, we're getting there. We're at 992 LOs as of today. We're 8 away from hitting the 1,000 mark, which you'll probably see a lot of stuff from me on social media. I'm happy about it, right? It was a goal that I had to where we're attracting really good people that I care about them. I care about their success in this industry on just the transparent values of how we operate, not only in this channel, but especially here at Edge Home Finance. When I talked to that originator today and I said, well, do me a favor. Let's price out a loan together. And this is why, if you notice on our cool little screen that we had here, shout out to our guy, Jake LaTorrell. He kind of helped me put that together. But if you go, we built this site. Chris Hacker and I sat down and I shared a story about, to me, it's almost like buying a car. I want you to be able to test drive it, right? I'm not going to go buy a car if I've never drove it, especially when there's fear of moving. And when you're talking about switching employment, there's a fear. I don't care what it is. Wow, I'm going to get paid twice as much. I'm going to have better interest rates, better service. there's still fear, right? And I respect that, because making an NMLS change is scary. It's the last thing you want, to where, it affects your reputation. If you're bouncing from ABC to DEF to FGALK mortgage, it doesn't matter. People are going to look at it and say, well, what's going on? What's going on with you? Why are you changing so much, right? So I understand the sincerity of really taking a step back and looking at it. So we created a website for you. It's joinedge.com. Do me a favor. If you're a retail originator, go to that site, right? Price out the difference and understand that, yes, just to give you an overview for those that are on this call for the first time, you don't know anything about Edge, I'm going to give you a quick overview of how we operate. We are what you call a flat fee model, meaning we charge $9.95 per file. So when you look at how much, I'll say money is generated from originations, we have a 275 basis point comp plan, and we take a flat fee of $9.95. Now, 275 basis points sounds great. We do have a $15,000 cap too. So, and that's a true pricing cap. So for the gentleman that I met with today in Hawaii, we got to price out $1 million loan. We priced out that $1 million loan. We're going to cap out at 150 basis points on lender paid. We take 1,000. And then from there, we're looking at what he makes compared to what he was selling. And this was another one. It was 3/4 of a point difference. Now, when I priced in where we were at that 3/4 of a point difference, it was $47,000. I mean, it was over $30,000. And I'm like, well, wait a minute. And he's asking me the same question that I hear all the time. If it's really that good, how come people aren't just coming in flocks? Why is retail is still in a position where they are not only, I mean, they're losing team members, right? At Fuse, it was kind of neat to see our slides that were put together. It's very obvious that they're losing people, but I still have conversations with those that I know, like, and respect that are on the retail side that are fearful that it's not the real deal. And I don't know why, right? I know for you, Major, you've been obviously a professional your whole life, but you've been in the mortgage industry 4 years now. I've been in this 22 years, and I've been on both sides of it. And, to me, I think it is like the fear of what happened in 2008, 2009, where we were left without a seat, right? Like, it was to the point to where we were afterthoughts and everybody had to flock to banks. Yep. Part of the reason, and I'm representing a little bit tonight with my AIM shirt, part of the reason why I'm thankful to be part of our trade association is now we have a seat at the table. Brokers are here not only for right now, but we're going to be here for the future. We have people like Brendan and Katie and all of our member leaders that are constantly our state captains that are going to DC on a daily basis, writing letters to our governors, everything that we need to do to make sure that now they understand, right? Brokers are financing 1 out of every 4 homes in the country. And we didn't have representation before, or at least adequate representation. And now we do. So to me, the reasoning of, like, if you were fearful of what this industry could hold for you because of what happened before, to me, that's a non-issue anymore, right? We have the support. Not only do we have the support, brokers are the number 1 lender in the country. If you talk about UWM, right? They are the number 1 lender, but bigger than Wells Fargo or Chase or anybody else. They are, they lend more, they do more transactions than any other point of origination in the country. And that's not just going to stop overnight. It's been proven that brokers not only are going to produce a better loan for the consumer, the statistics on it, and I'm going to give roundabout figures. And I know you're a detailed guy. My wife's the same way. Anytime I round something up or down, so you need to be specific. So I'm going to phrase it. This is a roundabout number. It's roughly $11,000 difference between using a mortgage broker and using a non-mortgage broker, right? We'll leave it at that. And for minority clients, it's like $13,000. It's even more. So we're proving not only in our own circles, but to the government agencies that we are vested in our communities, right? Major, you moved from Hawaii to Texas. What's the first thing you did when you moved to Texas?
First thing I did was I went out and meet some people, shake some hands.
That's it. right? You're
Kissing
in that
babies,
community. It's not like people
right?
are just, granted, we do a lot of work to try to make sure we have a good social image if you're in a mortgage professional, right? Your network is your net worth. You're going after trying to meet people. But the reality is, the people that use mortgage originators like Major or myself use us because we're in the community. They
Right.
know for a fact. I got the honor to meet some of Major's top agents when we went out for a realtor mastermind. They're going to tell you why they like him. He shows up, he works hard, he's accountable, and he's problem orientated. You're not getting that all the time on the situations where I'm sending something off to where before it used to be, do you have an underwriter in your office? I remember, because I've been a broker the majority of my career, and that was one of the questions that people were stuck on. Well, I have an underwriter in my office.
Who
And I'm like,
cares?
well, that's great. If I had an underwriter in our office here, guess who she's looking out for? Or he's looking out for. They're looking out for
Hmm.
me. And
Hmm.
to me, that was where I would get stuck with opinionated underwriting on that side that I couldn't stand. It would be if I'm looking at things from the basis of what I believe guidelines are, and then all of a sudden I have somebody's opinion. Well, this person switched jobs 3 times in the last year. I don't feel their income is stable because they're worried about a default for me as an owner compared to underwriting to guidelines and making sure that my originators, Major, the rest of our team, myself, that I can actually have some validity when I issue a pre-approval letter. That's my reputation on the line.
Right.
And I feel on the broker side that we get, we really get a fair shake at that. It's going to be based off of underwriting guidelines. And there's some things that are left up for determination.
Hmm.
If I get a bad opinion, I'm going to send it to one of the other 140 different banks that I have,
Right.
and I'm going to
Right.
put a new cover letter on that file and say, hey, Mr. and Mrs. Underwriter, this borrower switched 3 jobs, but his pay has increased every time he's bettering himself and his family. That deal is going to close, right?
Yeah. So, and the other thing, Tom, when people start talking about, hey, I got an underwriter, we have an in-house underwriting. It's all smoke and mirrors. Your problem with your in-house underwriting is when I hear that, I hear you have additional cost. You have additional costs that I don't have, and mortgages cost money. And the more overhead you have to pay, the more money the mortgages cost. So, I think when people make that statement of, hey, do you have an in-house underwriter? It's like, yeah, but that's why the rates are so much higher. I mean, people ask me all the time, like, hey, man, how is it on the underwriting or your underwriting on the broker side? And I'm like, the Fannie Mae selling guide is the Fannie Mae selling guide every
Yep.
single day. Now, are there some non-QM things we can do? Yeah, absolutely. But if you can originate on the retail side, you can do it on the broker side. And then people get into this other objection of, hey, well, we don't have the best rates, but we have great service. The service lies with the originator.
Yes.
That's where the service is. The service is not in the
100%.
company. The service is not in any place except the originator, the loan officer that's originating that loan. That's where the service is. What systems have they put in place? How do they communicate? How do they talk to the client? That's where the service is. And people will sometimes stay at retail companies where the rates may be worse, or or something like that, or they might get paid less because they say, well, and this is what was told to me when I was in the retail side. Well, our rates aren't the lowest, but we give good service to veterans. And I'm like, well, I am really the service. I am the communicator. I communicate with the buyer. So the service is with me, how I explain things. So I might as well go someplace where I can give a better rate, a much more competitive rate for the market, especially when rates are, where they are right now. I might as well be in some place where I can provide the service comes with me, and the rate comes from, the fact that I can look around at many different banks and say, hey, where's this company pricing compared to where's this company pricing? And you had a point there where you talked about minority buyers. And the reason that minority buyers we do save money for minority buyers is because, we have some banks, some wholesale lenders that, when, somebody might say, you know what, we're going to be more competitive in that, 640 to 660 credit score range. We're going to be more competitive there. So we want those loans. You should check out our pricing in between the 640 to 660 or 660 to 680 range We want those loans, send those buyers to us. We can't be competitive maybe at 800 plus FICO, but we can be competitive there. And then I, as an originator, know I can look at that bank and say, oh, I have a buyer that fits in that area. I'm going to send it here because I know their pricing is better in that range. My final point I'll bring out is the support side. You know, when you have reputable companies, you know, UWM, great company, great organization. I mean, for those of you that are listeners that don't know, the CEO of UWM actually owns the Phoenix Suns. So there's some money there, okay, and there's some pull there, there's some clout there. So that person who I'll give credit where credit is due, probably has been extremely instrumental in the broker channel being where it is right now, because we live in a copycat. The mortgage business is a copycat business, but they have been continuously leading the way. And when you look at the support that they provide, you know, when you come to Edge, they have multiple classes. They say, hey, you can come up to UWM, get educated, whether you're new to originating or you're new to wholesale. You go up there. They pay for the hotel, they pay for the flight. It's a partnership that we have with them because they're investing in us as originators. But the last thing I bring out is support. When I was at the retail shop, I had one branch manager. So if I had a problem file, I would go to that branch manager and she would help me try to figure out, you know, how to structure this, how to solve this problem, and all of this stuff. Tom just told you at Edge, I think we have 160, 180. I don't know what the number is, the amount of companies we can broker to. We have account executives at all of those companies. So essentially, I have 180 I have 180 branch managers that can say, hey, yeah, we can do this. If you structure it this way, and this way, we can get it to the closing line. I had one of those at the retail shop. Now I have multiple. So the support is amazing. And guess what? Those people want your business and they're fighting over your business because they don't get paid until you get paid, until you close a loan, until you put a family into a home. So it is a vested interest. Those people have a vested interest. If you have to request a PE, that means that somebody has the authority to say no to your PE.
Yeah.
On this side, it's like, okay, if I can make the deal work, I'm going to go figure it out and I'm going to go close.
That's it. You're going to take the hit and you don't need to ask anybody for it. I mean, to me, that is part of being a consummate professional, is being able to have decision-making powers, right?
Absolutely.
If you want to be a bank teller, I get it. That's fine. They're out there. I need somebody to deposit my checks too. But the reality is, if you're going to be a mortgage loan originator, why would you cut yourself off from not having the optionality? You mentioned, you know, yes, we have a plethora of different lending partners. But even if we take it a step further, I also have 1,000 team members to where I've probably witnessed the DNA of a certain deal. Like I had one today. It was a non-warrantable condo, right? The agent referred it over to me. The ball was dropped. It was with a company that I think should be going out of business here soon. But it came over and they were like, hey, I can't get this done now with the person that my company forces me to use because they have an agreement, right? You'll see some of these real estate companies that put lenders in their office. This, in my opinion, comes back to where choice is important, right? If you're a consumer, if you're a mortgage originator, I get it. If you're in a real estate office, that's awesome. We have some guys even within Edge that sit there, but it's not to the point to where you will never see Edge Home Finance with our own, no matter how big we get. We're not going to have a baseball stadium. We're not going to have I don't want to say a plane because that would probably be too directed. And so we'll just leave it at, like, our goal is to be able to keep our operational cost as low as possible to make sure that we can, one, pay our originators as much as possible and give our consumers the best rate as possible. And that's really, for me, as being, you know, when we started this company in 2011, my whole goal was to make sure that for originators that you had everything that you needed. What is it that you need as an originator? I need good technology, I need support, and I need control. I need control over pricing. And if you're somebody like Major, he's an entrepreneur, right? It just like, that is his deal. I'm not going to tell him, Major, this is how our system works and you need to fit inside of it or else we're not a fit for you. That's not how it works. Major has taken it. He likes his own brand. He runs under his team name, Major Money Matters, because I want him to have that value proposition, right? if it ever gets to a point where, you know, I don't want to say that it's like, it gets to a point to where like he outgrows us, good. Our value proposition is so strong with our team members that we do not have attrition. Like we've lost maybe 3 or 4 people since we've opened our doors 12 years ago that I'm sad that they left, but they left because they were, somebody dangled a carrot that wasn't realistic. And our doors are open for them, right? And to me, our business here is about relationship. And what I want to have and why we're doing these calls, especially at 8 o'clock at night, because I would rather be at home with my wife and daughter. But the reality is it's important to me. I almost feel bad. And I'll give a shout out to Courtney Kutu. She's one of our top recruiters here. She literally will tell you, I almost feel bad when I talk to a retail originator that, won't even give me the time of day when they don't realize they're getting ripped off. And it's like, I agree with you. We are in the business to sell money. If you're a mortgage loan officer, if you're an originator, a broker, whatever you want to call yourself, we're doing the same job. And at the end of the day, the details have to matter. What are the details of not only what you're being compensated, but the rates that you're offering, the optionality? You need to look at it, because right now, if you're ever going to make a change when you're at a 28-year low, right? You're at a 28-year low for applications. When you're, I hate to say this, but when you're to the point where you've got money coming in hand over fist in this industry, you can't afford to change, right? You really can't, because you got so many things going. It makes it very difficult. If there was ever a glimpse in your eye to where you said, man, there's something about broker that I like, take that opportunity and reach out to me or Major, right? My email, just so you guys know, it's tom@edgehomefinance.com. Major, we're on both of the social media. Search us up, Major Singleton, Edge Home Finance. Go check out his page. The way that we operate here, everybody kind of, is their own team lead. Major has a team of roughly 35 to 40 individuals that work directly for his team. Now, half of those people, I would say more than half, I'd never even have to talk to them. I'd like to. If they need something, they can reach out to me. But
Right.
he runs his show, right? He makes sure that when he talks about what is the level of client experience that's given, it may be different here. There's somebody that may not give as good a service as Major. Maybe somebody won't give as good a service as me. That's on the individual. But the reality is we submit a loan and it takes about 4 hours for approval. Our average as a company with UWM, who's our number one lender, is 11.3 days from submission to clear to close. There is really, when you look at the factual statistics of it, we're in the business to sell money. We sell it cheaper, we close faster, and we pay more. And if you're still at a retail spot, maybe you got a retention bonus, right? A lot of them, that's kind of, if we want to talk about that for those, because we got probably a lot of non-industry people that are tuning in. Maybe they just want to hear what we had to talk about. Talk about that part. What are retention and signing bonuses, and what are they doing to this industry?
It's really hurting the originator and it's hurting the buyer. So what happens is they give a large signing bonus up front, and really what they're doing is making sure they have that person for X amount of time, a year, 2 years, etc. And so you really have to serve out that time. And I cannot tell you, Tom, the amount of originators that I talked to that took a signing bonus and they want to leave, but it's too much to pay back the signing bonus. Guess what?
Yeah.
We've had people that have actually said, yeah, forget the cheese, let me out of the trap. And they have paid back the signing bonus. And guess what? They did it in about 3 or 4 loans that they closed over here. They just paid back the signing bonus and went on with their lives. But what that does is that, and I caution any originator, any company, I will tell you, if you're looking for a sign-on bonus, Edge is not the place for you. Okay. We do not do sign-on bonuses. You close 3 loans, it's kind of like you got a sign-on bonus. But we
get a
don't
lifelong bonus for every loan you close.
But we don't do sign-on bonuses, because if somebody gives you $100,000 sign-on bonus, you realize that that has to get priced into your pricing one way or another. You have to sell loans at a higher rate to basically pay back your signing bonus.
Yeah.
So it doesn't make sense. And people are they're so like, well, I need some help, transitioning over. Okay, cool, man. Send me your next 2 buyers. I'll make sure you get I'll close them for you. I'll make sure you get a very nice signing bonus. But it is really having a detrimental effect on originators. And I think, one other point I wanted to bring out, Tom, a couple of points here. You have to have the optionality of different products. Now, you will hear retail companies, the interesting thing. So I was at the retail company, and they were telling me that I shouldn't become a broker. However, they opened up broker lines.
Yes.
And I was
Yeah,
like,
that's happening all
this
the
is
time right now. That's how,
yeah,
honestly, I mean, I hate to say this company's name, but that's how Rocket is doing well in TPO right now.
yeah,
Every retail company is set up with a Rocket brokering, and they're loving it. The originators are reaching out and saying, "Well, how come if brokering is so bad, how come we're sending it to them, and then they get to actually find out what the true price is?" Well, on only broker loans, you get 65 basis points of the 250,
it's insane.
and like, wait
It's
a minute,
insane.
how does that
It's
make sense?
it's totally insane. But then you come over here at Edge, you have a plethora of different options. And when you have a plethora of different options, you have options to serve clients, serve realtors, and make more money. Listen, in my pipeline right now, I'm a very large VA producer. Okay. However, in my pipeline right now, there are a couple of second lien bank statement loans.
Yeah.
Yeah, if you're talking to me 4 months ago, didn't even know I could do that.
Nope.
I'm also in escrow on a car wash on a commercial deal.
Yep.
Really excited about that. But there are these options that are open to you, and that gives me an option to build another segment of my business. Yeah, I can do down payment assistance. Yeah, I can do VA. But realtors also call me like, hey, I got this commercial buyer, and they're buying this property, and they just want to talk to you about what their options are. Or I've got this business owner that hadn't filed taxes in 4 years. Well, great. What does the bank statements look like? So,
Yep.
all of these optionality that you have to really, I have the options to generate more income for my family in a down market, because that's what you need, more programs. My last thing for originators is the biggest headache I had when I left the retail shop, okay, was I did not own my business. And what is your business? Your business is your CRM.
Yep.
If you don't own your CRM, and you don't own the information of the people in that CRM. When I was closing deals at that company, I was closing them as a representation of that company. Okay. Now I close deals as a representation of me. Okay.
Yeah.
So
Yep.
Edge supports me. I am on the platform. However, every deal that I close, Edge doesn't have access to my CRM. They don't have access to my clients. Nobody on my team, I don't have access to their CRM. You control your CRM, you control your clients, you control the information. If you do not own your CRM, and you are continuously closing deals in the name of a company, that company can one day say, you know what, you're gone. Or one day they can say, you know what, we're selling that information to these people over here. This happened, Tom. I don't think I ever told you this. I'm transparent here. When I was at the retail shop, my company, our Earl rates were at about 2.6, 2.8. This is back in 2021, 2.6, 2.8. Our Earl rates were. So what happened was the owner of the company sold off our entire VA database for him to make money. They sold it off to Freedom Mortgage. Freedom Mortgage refinanced all of my clients down to 2.25.
Yeah, that's brutal. I mean, that's to me where, like, that kind of stuff honestly makes me sick to hear. But the reality is, you'll hear it from me all the time. I've been like, part of why I became a part of even AIM when it started with Brawl was for that reason. From a wholesale lender standpoint, this is where the market has changed. We used to be to the point where we thought we were selling loans, we were selling clients, and then it was like, wait a minute, that's not what we agreed to. Luckily, there was a group of brawlers that got together, and we blackballed them. Right? We're not going to send business to you if that's the way you treat us. And to me, it's still common. I don't know too many other companies that operate the way that we do. From the same point of what Major said, I don't want your database. What I want is a relationship. I want a relationship where there's value provided. The value that we provide for Major doesn't have to do payroll. He doesn't have to do accounting. He doesn't have to do call reports. We just went through 5 audits, right? We do over 3 billion a year. So we go through audits all the time. He doesn't have to focus on anything besides how can he serve his customers better? How can he provide a higher level of service? What can he do to maybe improve his technology on his CRM? He invests into it, right? Because at the end of the day, if anyone leaves this company, the CRM's yours. You have your client database. You try to leave a company you're at right now, you're trying to pull the midnight escape and you're trying to download,
Absolutely.
your
You gotta
Excel
sneak out.
spreadsheet. I don't want that. I will tell you right away, our tech package, we charge $125 a month, and I give you the 5 pieces that I feel that are necessary for you to run your business. And every week I get asked, well, what CRM do you offer me? I don't. And it's not because I don't want you to have one. I literally spend, I'll say, hours a week helping originators link their CRM to our loan origination software so that everything's automated and runs smooth. But I want you to own it. This is your business. If you are in this as a career and not a job, it's a key point of making sure that the value, and who knows, I think somebody said, 150 clients and thousands of applications gone, right? For Major, what do you think that guy sold that for? I
Oh my
guarantee
God.
you there was some good money into it.
Absolutely.
To
Absolutely.
me, we don't put value on those things. Where I put the value in is I put the value on people like Major that see partnership, that know, you know what, he could open his own company tomorrow. And I've talked to him about it. My job as a owner of this company is to provide such a high level of value that it's cheaper for him to work with me than what it is for him to go off. And that's why if you look, for those that are into MMI stats, look at other companies and see how many top producers they have compared to the top producers we have here at Edge. They don't leave because the reality is, one, I don't need a retention bonus for them not to leave. I'm there to help. If Major calls me at 9 o'clock at night, which he never does, but if he did, he knows how to answer his phone. If he has something he wants to talk to he wants to bend my ear on and say, hey, Tom, this is what I'm thinking about doing. We have high level conversations all the time that really are the basics of what him and I are both concerned about. How do we serve our customers better? How do we help educate people more? What can we do to make the client experience better? That's all that matters. We don't have to worry about anything else because the reality is our lender partners do the majority of it for us, right? We have an issue with underwriting. Guess what? Major serves on one of our advisory panels with UWM because they invite us to, because they don't get business unless we grow. It's finally set up in a situation in the wholesale channel that we're watching it explode, right? We really are. If you're looking at the amount of people, we'll see what happens around renewal time. But right now we're watching retail originators lose LOs. We're watching brokers join, our channel's growing. And why is that? It's simple. We're in the business of selling money. We sell it cheaper, we close faster, and we pay more. And that's it. So if you're stuck on that retention or hiring bonus, reach out to me. Let's set a game plan, right? There are so many things that we have here at Edge that are going to empower you to dominate in your market, not only in a down market, but when the market does turn, the optionality that Major's talking about. I know he's got like an $8 million house under contract on some commercial deal, right? Cool. He has a car wash going right now. The funny part what he said too, and it's the same for me, I used to refer HELOCs out to have a local credit union relationship. Never did them. Now we can do them. Not only we can do them, we can qualify people off of their business bank statements. Optionality is key. If you're going to be a professional in the business of lending money, I will tell you that not only is there no place better to be than Edge Home Finance, but at least if you're not going to choose me, go to a different broker then. We got a lot of good companies in this industry. Luckily, I'm friends with the majority of all the owners because I want to see them succeed too. And the reason why is I know we're better for the consumer, right? To me, that's what's most important to me, is to make sure that, our values align with what my end goal is. And for me, that's, doing right by others, making sure that we're honest and transparent. So Major, we went 45 minutes, kind of late. I appreciate you being on here with me. Thanks for all of those that tuned in. A couple of really good questions. I will respond to it. It's probably not going to be tonight. I'm going to go home and spend a little time with my family before the end of the day, but really appreciate you. Thank you for being a leader in our industry, leading with integrity, showing people if you're a retail LO right now that says, well, yeah, I don't know how to scale a team on the broker side, reach out to Major, right? He's got a team of roughly 40 and he's continuing to grow and multiply it in the broker channel. If you're looking to join, reach out to any one of us. Now is a great time. And I don't want to try to take advantage of a bad situation. But the reality is, if you're going to switch when the industry is at a 28-year low, not when your hair's on fire and you got contracts flying in and you can't even think about it. Yeah, I might be losing 100 bips on every deal, but I don't have time to worry about it. Right now, you have time to worry about it. And it's if you're ever going to do it, now's the time. So with that, I wish you all an amazing evening. Major, thanks for being the man, my friend. Tell your wife I said hello. And hopefully you had a good time. Do you have any kids over for trick-or-treating?
No, man. I turned the light off. I can't deal with it.
We had 20 kids over as my daughter had a party, but there was no kids that come into our house for some reason.
So I do have one last thing to say, Tom, before we wrap up. You know, the reality is nothing is for everyone. Okay. So, but if you're a self-originating loan officer and you generate business, your own business, and people are trying to convince you that you need the company, you don't. You certainly do not. This and Tom, you know, I have been offered hundreds of thousands of dollars to leave Edge, and you cannot pay me to leave because I have the freedom to do what I want to do, run my business, control my pricing. It is absolutely amazing, the opportunity here. What's also heartbreaking is that people don't even ask questions about the opportunity. So if you're an originator, you're watching this, just take the time to ask the question. Even if you decide it's not for you, you really need to take the time to ask the questions because you know what you know. Me, I've been on the retail side. Tom's been on the retail side. He knows retail and knows this industry like the back of his hand. We know what it's like to be retail and broker. Many of you only know what it's like to be retail.
Valid point. You don't know what you don't know.
Yep.
All right.
Hi, Tom. Thanks a lot. I appreciate it.
Thank you again.